Hey, and welcome to this episode of Matched Betting Uncovered, brought to you by Profit Duel.
Thanks for having me. I'm really excited to get into this one.
Yeah, me too, because what if I told you that Las Vegas casinos and, online sports books are intentionally giving away millions of dollars this year?
And the craziest part is the only thing really stopping you from taking your cut is simple middle school math.
Exactly. So today we are launching into a deep dive of our own exclusive guides and articles, focusing on a topic that is it's absolutely crucial for anyone looking to build a guaranteed side hustle. We are talking about mastering the secondary sportsbook.
Which is really the secret sauce of the whole operation.
Oh, totally. And I want to speak directly to you, the listener, for a second. You might already understand the basics of, grabbing a sportsbook welcome offer. You see the promo, you sign up, you get the bonus.
Like the easy part.
Yeah, but figuring out what to do next, like how to actually turn that promo into bankable cash without risking your own money, that can feel like navigating a complete maze. You're suddenly looking at all these platforms and numbers, and it's incredibly easy to get lost in the noise.
Yeah, because the welcome offer is really just the bait.
Right.
The actual mechanism that allows you to extract profit from that offer safely, without just crossing your fingers and hoping your chosen team wins, is the secondary sportsbook. It's really the entire foundation of the strategy outlined across our articles.
For sure.
Like, if you do not understand how to leverage a second platform, you're literally leaving guaranteed money on the table.
Okay, let's unpack this. Before we even get into how to choose this magical second platform, we need to understand why it is the absolute engine of this entire matched betting strategy.
Yeah, we have to start with the mechanics.
Right, and based on our guides, the core concept of matched betting is incredibly simple, but also kind of mind-blowing the first time you grasp it. It works by mathematically covering all potential outcomes of a specific game.
Every single outcome.
Yeah. But before we look at the game itself, I want to talk about the psychology of the sports books. Like, why are these massive profit-driven corporations just handing out, say, $200 free bets to anyone with a smartphone? I mean, they aren't running a charity.
No, definitely not. That behavior, it really comes down to a fundamental business metric called customer acquisition cost.
Okay, break that down for us.
So the sportsbooks have run the historical data. They know that if they give a new user $200 in promotional credits, that user will likely, get a thrill from the action.
Right, they get hooked.
Exactly. They stick around, and eventually they'll lose, say, $500 of their own money over the next calendar year. The house always wins in the traditional gambling model.
Right.
So they are willingly taking a short-term financial hit on that promo because they view it purely as a marketing expense. It's a calculated investment in a new gambler.
Oh, wow. So they are essentially treating that free bet the exact same way a normal company treats the cost of a billboard or a television commercial.
Yes.
They fully expect a massive return on that investment.
They bank on it.
Yeah.
And matched bettors are simply intercepting that marketing budget. Instead of playing into the sportsbook's long-term expectation of a loss, a matched bettor uses a secondary sportsbook to completely neutralize the risk.
Which is brilliant.
It is. You step in, capture the marketing dollars, and step out before the house edge can even touch your own capital.
Let's put some real tangible numbers to this so we can see the mechanism in action.
Okay, let's do it.
Let's say I sign up for a primary sportsbook. We will call it Book A, and they give me a $100 promotional bet just for creating an account. I decide to use that promo money to bet on the Kansas City Chiefs to win their next game. Now, if I just stop there, I am gambling. If the Chiefs lose, my promo money vanishes and my balance is zero.
Exactly. Which is why you immediately open up a secondary sports book. Let's call it Book B. Over at Book B, you place a bet on the Las Vegas Raiders to win that exact same game.
You take the other side.
Right. You are deliberately taking the opposing side of your original position, and you use your own cash to fund that second bet.
The way I am visualizing this, it is kind of like finding a vintage watch at a neighborhood garage sale for $50 when you already have a buyer on eBay willing to pay $100 for it.
That's a perfect analogy.
You aren't gambling on whether the watch might appreciate in value over the next 10 years. You are just bridging the gap between two different markets to lock in an immediate risk-free profit.
It's exactly.
With the sports books, if the Chiefs win, my account at Book A grows. If the Raiders win, my account at Book B grows. Because I used promotional funds to cover half of the equation, I am mathematically guaranteed to walk away with more cash than I started with, regardless of the final score.
But that mathematical certainty only exists because of the secondary sportsbook.
Right, of course.
If you attempt this strategy with only one platform, you're relying entirely on a lucky bounce of a football. The secondary sportsbook is the exact mechanism that converts a risky gamble into a calculated, bankable financial gain.
Which changes everything.
Completely. Unless you happen to live in a jurisdiction with a dedicated betting exchange, the entire matched betting process falls apart.
Right. So since this second book is absolutely mandatory for the strategy to function, we have to figure out how to actually pick one. You can't just throw a dart at a board of random apps.
No, you really can't.
Our guides spend a lot of time talking about the criteria for a great secondary sportsbook, starting with the variety of available markets. But before we get into the different types of markets, I want to pause on something.
Sure.
Reading through our articles, I keep seeing terms like back bet and lay bet. For anyone who isn't fluent in casino speak, what do those actually mean in plain English?
Yeah, the terminology can definitely be a barrier to entry at first. A back bet is simply betting that a specific outcome will happen. You are backing a team to win.
Simple enough.
Right. And a lay bet is betting that a specific outcome will not happen. You are laying against a team.
Okay, I'm with you.
Now, traditional secondary sports books in the U.S. generally do not offer true lay bets. Those are mechanisms found on specialized platforms called betting exchanges.
Right, which aren't everywhere.
Exactly. So when you are using standard American sports books for this strategy, your lay bet is essentially just taking the opposing side of a money line. If your back bet at Book A is Chiefs to win, your equivalent action on a standard secondary sports book is betting Raiders to win. You are simply ensuring that every possible outcome of the event is covered.
That makes total sense. So moving back to the markets, a beginner might just look at that main money line, who wins and who loses.
Which is totally normal.
But our content stresses that a great secondary sportsbook will offer a massive variety of markets outside of those traditional wagers. We're talking about player props, specific quarter outcomes, or even obscure things like the number of corner kicks in a soccer match.
And having access to a wider variety of options gives you a significant competitive edge. It expands your surface area for finding highly lucrative matches where the numbers between your two sports books are perfectly aligned for profit.
So the weird bets are sometimes the best ones.
Often, yeah. The inefficiencies and the best margins usually hide in those secondary, less popular markets.
Though our articles do give a really important warning here. Always read the terms and conditions.
Oh, absolutely.
You might find a brilliant mathematical match on that obscure corner kick market, but if the primary sportsbook's promo terms explicitly state that the offer is only valid for moneyline bets, you are going to void your own promo and ruin the math.
Yeah, navigating those T&Cs is a vital habit to build early on. And that leads directly into the core factor of choosing a secondary sportsbook, which is finding competitive odds. You are ultimately looking for the tightest possible numerical gap between your initial bet on your first sportsbook and your opposing bet on the secondary platform.
But wait, here's where it gets really interesting. If everyone is watching the exact same game, wouldn't all sportsbooks just offer the exact same odds?
You'd think so, right?
Yeah. I mean, the probability of either team winning is a static reality. A player's historical stats are a matter of public record. Why would the sportsbooks even differ in the numbers they offer to the public?
What's fascinating here is that sportsbooks aren't actually trying to predict the exact probability of the game with perfect accuracy.
They aren't.
No, they're actively trying to balance their own internal liabilities.
Yeah.
Different sportsbooks have different predictive models, different volumes of active customers, and vastly different amounts of money coming in on either side of a specific wager.
Oh, I see. So if a massive wave of public money at one sportsbook suddenly pours in heavily on Patrick Mahomes and the Chiefs, that platform is suddenly exposed to a massive financial loss if Kansas City actually wins the game.
Exactly. Which forces them to adjust their odds in real time. They will make the odds for the Chiefs less attractive and simultaneously make the odds for the Raiders much more lucrative to incentivize new money to flow toward Las Vegas.
Just to balance things out.
They need to balance their own ledger, and we also see regional biases play into this. Like if the Philadelphia Eagles are playing, a sportsbook operating heavily in Pennsylvania is going to see a disproportionate amount of money coming in from passionate local fans backing their home team.
That makes sense.
So to mitigate that massive local liability, that specific sportsbook has to warp their odds compared to a sportsbook based in a completely different region.
So they are reacting to the behavior of their own specific customers, not just the reality of the game on the field.
Yes, and every sportsbook has a different customer base, making different bets at different times. Those slight numerical differences, those tiny fluctuations, caused by how each individual platform manages its own risk. That is the exact space where a matched bettor's profit margin lives.
Wow.
It is financial arbitrage in its purest form.
Yeah.
And, as an added bonus, some advanced matched bettors use a strategy of combining promo offers from both sites simultaneously. Knowing what promotions are actively running on your secondary options serves as a powerful multiplier for your overall returns.
Knowing what to look for, like a huge variety of markets, highly competitive dynamic odds, and good promos, that is all great in theory. But how do you, as the listener, actually apply this when faced with an absolute flood of options? We aren't just talking about choosing between 2 or 3 apps on your phone.
No, definitely not. We are looking at an incredibly crowded and honestly aggressive landscape.
Right, our content points out that there are currently around 60 online sports books operating in the U.S. alone. 60.
It's a lot to take in.
You have the massive, ubiquitous names like Bet365, Hard Rock, and Caesars. It is an overwhelming amount of choice for someone just starting out.
Which is why reputation matters heavily when you are choosing where to park your capital. You need platforms that are secure, reliably regulated, and possess a proven track record of actually paying out their users without unnecessary friction.
Speaking of track records, I love this surprising historical detail from our guides. When you look at a modern app like Caesars Sportsbook, you might assume they're relatively new to the digital sports betting space.
Sure, because the apps feel so new.
Exactly. But they actually have incredibly deep roots. The Caesars brand has been operating physical casinos in Las Vegas since 1937. So even though the digital interface you are tapping on is new, that foundation of trust, regulation, and financial stability has been building for nearly a century.
And that historical footprint is a strong indicator of reliability. However, before you even look at a sportsbook's history, their market variety, or their odds, there's a golden rule you must follow.
The very first hurdle.
State eligibility.
Right. Never assume a sportsbook operates legally in your state without verifying it first. Just because you see a slick commercial for a platform during a national television broadcast does not mean it is legally permitted to operate in your specific jurisdiction.
The regulatory laws change state by state, and honestly, sometimes month by month. The platforms use incredibly strict geolocation software to ensure compliance. You have to verify your eligibility before you attempt to open an account or transfer any funds.
It's like trying to plug a European appliance into an American outlet. If the regulatory infrastructure isn't there for you, it simply won't function.
Exactly.
But assuming you have found the legal, reputable options in your state, our guides highlight a major strategic shift that beginners really struggle with. It involves the hidden danger of brand loyalty.
This is a huge one. Human beings naturally crave simplicity and routine. A beginner will often find one secondary sportsbook that they enjoy using. Perhaps the user interface is really sleek or the deposit process is fast.
Yeah.
And they will stubbornly use that single platform for every single matched bet they execute.
They treat the sportsbook like their favorite sports team. They just get comfortable and settle in.
Which is a huge mistake. In the world of financial arbitrage, comfort costs you money. Relying on just one secondary sportsbook out of misplaced loyalty severely compromises your opportunities.
Because you're stuck with their odds.
Right. If you restrict yourself to a single platform, you are forced to accept whatever odds they happen to be offering that afternoon, even if those odds heavily eat into your profit margin. Diversifying your portfolio and ruthlessly picking your secondary sportsbook on an offer-by-offer basis is the real key to long-term success.
You really have to stay objective.
You have to treat these platforms like commodity brokers. You go where the math is best every single time, without exception.
But man, hopping between dozens of different sportsbooks on an offer-by-offer basis sounds incredibly chaotic. It sounds a bit like trying to spin 60 different plates at once while doing mental math. How do you manage multiple accounts without completely losing track of your money?
If we connect this to the bigger picture, long-term success in this space isn't just about finding good odds.
Right.
Anyone can stumble upon a favorable set of odds once. Sustained, scalable success requires strict account organization and meticulous bankroll management.
Spreadsheets basically have to become your best friend.
Oh, without a doubt. You need a central ledger. You must maintain a detailed record of every single bet you place. And your ledger needs to be comprehensive.
Like down to the penny.
Exactly. You need a column for the date of the event, the specific teams playing, the exact promo type you are utilizing, your starting balance in Book A, your starting balance in Book B, and your locked-in expected profit margin.
That's a lot of data.
It becomes a living, breathing balance sheet. Effectively managing your bankroll across multiple secondary platforms ensures you always have a clear, top-down view of your liquidity.
I can completely see how people fail at this step. If you have, $50 tied up in Bet365, 100 in Hard Rock, and another pending promo sitting in Caesars, and you aren't writing any of this down, you are going to wake up one morning and think you have lost money simply because you forgot which digital wallet it is sitting in.
And at that point, panic sets in. The user gets stressed, abandons the math entirely, and usually makes a reckless traditional gamble to try and win back the money they think they lost.
Which is exactly what the sportsbook wants.
Exactly. Organization removes the overwhelm and keeps the process purely analytical.
But even with flawless spreadsheet organization, manually checking 60 different sportsbooks for the best odds sounds like a nightmare. You are comparing the markets, reading the individual TNCs, and doing the decimal math by hand to ensure a guaranteed profit. I mean, that sounds like a grueling full-time job.
It does, and that manual grind is the primary hurdle that deters most people from turning this into a serious income stream.
Fortunately, our guides offer a high-tech shortcut that does the heavy lifting for you. We are talking about the Dutch Matcher from Profit Duel.
The Dutch Matcher is a purpose-built software solution designed specifically to automate the exact problems we have been unpacking.
It's a game changer.
It really is. Instead of you sitting at a desk with 15 different browser tabs open, frantically refreshing odds before they change, the software automatically scans the entire ecosystem of sportsbooks available in your specific geographic area.
Hold on, you're telling me an algorithm just does this automatically? If it is this foolproof and the math is this guaranteed, why isn't Wall Street doing this instead of trading stocks?
Well, Wall Street actually does do this.
Wait, really?
Yeah, it is a practice called statistical arbitrage. And hedge funds use sophisticated algorithms to exploit tiny price differences across global stock exchanges every single second.
Oh, wow.
The Dutch Matcher is simply taking that exact same institutional financial technology and applying it to the multi-billion-dollar marketing budgets of consumer sportsbooks.
Okay, that completely reframes how I view this software. It is literally an arbitrage algorithm built for the everyday person.
That's exactly what it is. It filters for your specific location, instantly solving the state eligibility hurdle. Then, it identifies the best opposing odds across all those legally available platforms in real time. But it goes significantly deeper than just showing you raw numbers.
How so?
The Dutch Matcher factors in your preferred bet type, your specific profit goals for that exact match, and the available bankroll you currently have, liquid.
So it isn't just the search engine. It is actually calculating the wager for you.
It calculates the exact decimal. Let's go back to our earlier example. You have a $100 promo on Book A. The software doesn't just tell you to bet on the Raiders at Book B, it uses the arbitrage formula to calculate the perfect balance. It will tell you to place exactly $52.30 on the Raiders at Book B, because whether you win the promo on Book A or the $52.30 on Book B, your net profit will be exactly $40 no matter what. It completely takes the guesswork out of picking the perfect secondary sportsbook and sizing your wager.
So what does this all mean? It means you do not have to be a mathematical savant or spend 40 hours a week staring at rapidly blinking odds screens to make this strategy work. It means you can join over 500,000 users across the US and the UK who are earning consistent monthly profits in the thousands of dollars, and they're doing it through pure cold strategy, not by getting lucky on game day.
When you utilize the right tools and ruthlessly select your secondary sportsbooks based on data, you remove the concept of gambling from the equation entirely. You are trading data points.
And you don't even have to take a massive leap of faith to try the software we just analyzed. Listeners can actually try Profit Duel and get their hands on the Dutch Matcher for just $1 for their first week. You can literally watch the arbitrage algorithm work for yourself for less than the price of a cheap cup of coffee.
It is a remarkably low barrier to entry to see how the mechanics of matched betting function in a real-world environment.
It really is.
So, to synthesize what we have covered today, maximizing your matched betting side hustle truly comes down to understanding and aggressively utilizing a secondary sportsbook. You cannot rely on a single platform.
Never.
You must prioritize finding competitive odds on an offer-by-offer basis, diversifying your accounts to avoid brand loyalty, and above all, using powerful, purpose-built software to stay organized and execute the heavy analytical lifting for you.
It takes the chaos of 60 different sports books and funnels it into a clear, step-by-step path to profit.
And it leaves us with an interesting final thought to ponder.
Let's hear it.
We have talked about how sportsbooks rely on the general public, treating this as a game of chance. But if software like the Dutch Matcher can entirely remove the luck aspect from sports betting by turning it into pure, risk-free data matching, are we actually witnessing the end of traditional gambling? Are we standing at the dawn of a new, purely mathematical financial market that has just been hiding in plain sight this whole time?
That is a wild thought to leave off on. From throwing darts at a board to literally trading data like a Wall Street hedge fund. I love it. That's it for this episode. Thanks for listening, and we'll see you next time.